While crypto natives scan their token watch lists, moonshots might be easier to find in the good old-fashioned stock market. Crypto companies are going public, their stocks have gone parabolic, and crypto exchanges are queuing up to be next. But with some exchanges posting shaky numbers, it has many investors wondering whether these crypto stocks are worth it. That's why in this video, we'll break down the growing trend of exchanges going public and ask whether their stocks are worth your time and money. My name is Guy, and you're watching The Coin Bureau. Stay tuned. First up though, I am not a financial advisor and nothing in this video should be considered financial advice. This is educational content meant to inform you about crypto stocks. So, if that sounds good to you, hit those like and subscribe buttons, smash that notification bell, and let's get into it. Now, as you've probably heard, Bullish recently kicked the IPO door off its hinges. If you haven't heard or you're not familiar, Bullish is a regulated crypto exchange based in the US. In their own words, Bullish is, quote, the standard for institutional crypto trading. It also happens to be the parent company of crypto news outlet CoinDesk. Bullish is backed by heavyweights like PayPal co-founder Peter Thiel, and it's run by former New York Stock Exchange president Tom Farley. Now listed on the New York Stock Exchange, it's worth noting that Bullish is not a retail-first app. Instead, it focuses on institutions as the institutional rails for spot, futures, and other crypto trading services. When Bullish IPO'd on the 13th of August this year, its stock was priced at $37 before trading began and ended up opening around $90, a bullish start, if you will. From there, it ripped to roughly $118 and spent much of the session in the 90s. Depending on the timestamp you use, you'll see around a 218% intraday move at the highs and almost a 90% gain at the day's close. Whichever way you look at it, it was a monster debut. And that's not all. Prior to the IPO, Bullish raised about $1.1 billion, selling 30 million shares. At those intraday highs on day one, the market briefly showed a $13 billion valuation. Clearly, what we have here are public markets telling you they want regulated crypto infrastructure. Listed, supervised, pick and shovel plays are getting premium treatment in a pro-crypto regulatory era. And for added crypto flavor, Bullish said the entire $1.1 billion of IPO proceeds was settled in stablecoins, a first for a US offering of this size. Both crypto natives and TradFi purists recognize that as a notable flex, crypto's plumbing taking center stage. Given Bullish's business focus, the stock's early performance was yet further confirmation that we're in a cycle driven more by institutional demand. Bullish is all about market making, compliance, and connectivity, less about tap to buy, number go up. Not that there's anything wrong with that. That said, the debut also featured an unusually large retail allocation, about 20% of the shares before trading went live. That split gave individual investors a meaningful bite without turning the deal into a frenzy before the open. Following the major success of Circle's IPO, Bullish has shown us that the IPO window is very much open and it's welcoming crypto infrastructure plays that tick regulatory and institutional boxes. So, we can look at it this way. The gold rush atmosphere in crypto right now is clear and big players are ready to sell pickaxes. This trend will not be immune to the usual market forces of greed or fear, but the success of these IPOs signals what this market wants: regulated and institution-ready investments. Now, not surprisingly, many crypto companies have taken note and are now looking to replicate Bullish's success, particularly other crypto exchanges. And at the front of the queue for the next exchange public listing, we have Gemini. The Winklevoss-built exchange is eager to get in on the action after confidentially filing back in June. The pitch is familiar. Gemini is a US-based compliance-first exchange now looking to join the club of publicly listed crypto venues. The twist, however, is in the numbers and timing. Gemini's filing announcement landed just 2 days after Bullish's blockbuster debut, and that filing revealed some rather interesting details. In the first half of 2025, Gemini lost about $280 million, with roughly $68 million of revenue. The same stretch last year was a $41 million loss with $74 million of revenue. Big losses and slightly lower sales. That is a tough combo for a listing. Markets are ruthless in their honesty when it comes to this stuff. So, given the hard headline figures, there are now whispers that Gemini's timing looks like they may simply be trying to cash in while the going's good. There were also other noteworthy revelations about Gemini from its public filing. The exchange set up a $75 million credit line with Ripple, which included an option to grow that line to $150 million if targets are met. And on a side note, Gemini has since announced a new XRP version of its credit card in partnership with Ripple. But while the XRP army rejoices, Gemini's costs are rising. Axios highlights a big jump in sales and marketing, about 3.5x to $25 million in Q2. Gemini's trading volumes are up, but average fees are down, and market maker incentives are eating into margins. That last part is standard when a mid-tier exchange tries to pull flow from larger rivals, but the final net effect on Gemini's bottom line remains uncertain. Now, Gemini said that it will use IPO proceeds for general corporate purposes and to repay all or part of its third-party debt. There's also a chunky debt-to-equity conversion tied to the Winklevoss family office, about $675 million of notes and term loans turning into stock at a 20% discount. In plain English, that lowers debt, but creates a one-time accounting hit that makes those recent H1 losses look worse than they are, even though it improves the capital structure going forward. So, we have some housekeeping with side effects, although that's not necessarily a red flag. So, why list now? Well, likely because the market is hot and it might pay up for brand, licenses, and US compliance today, not 12 months from now. Bullish just showed that there's still a serious market appetite for crypto companies. Gemini is essentially hoping that this appetite will be forgiving of some less than stellar numbers. And Gemini's IPO will be a useful barometer for investor sentiment, which is apparently still bullish at this current juncture. If investors remain in gold rush mode, they might be willing to overlook Gemini's lackluster numbers with the expectation that the exchange has a bright future. If, however, Gemini's stock has a poor debut, then it's a solid signal that froth is subsiding. So it all depends on what kind of deal investors think they're getting on IPO day. But before then, if you're looking to get some great deals for leading crypto exchanges, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. All you need to do right now is hit the link in the description or scan this QR code. And once you get on the deals page, you'll see all of our offers across a range of exchange partners. Click on one of the Sign Up Now buttons and that should take you right to the deal. Now, these deals won't be around forever, so take advantage of them while you still can. So, crypto companies are eager to IPO because the market is hot, but can these events give us an idea of where we are in the market cycle? Well, let's have a quick look at some history. In April 2021, Coinbase listed on the Nasdaq. That was actually a direct listing as opposed to an IPO, but we won't get bogged down in those details here. Anyway, Coinbase stock opened at $381, spiked to about $430, and closed near $328 to be read on the day, an instant sentiment gauge for the entire asset class. During that same week, BTC set an all-time high of around $65,000, with the ultimate cycle high landing only slightly higher at $69,000 later that year. So, considering this, many have pointed to crypto firms going public as a sign the market has hit a major top, granted that Coinbase rallied again in late 2021 along with BTC. In combination with that, many also focus on where retail shows up within the businesses going public. In 2021, you could see crypto hype in the App Store listings. The Coinbase app hit #1 in the US right around the time the stock went public. Froth was as visible as the number of app downloads. This may lead you to believe that markets are safe from a cycle top as long as crypto exchange apps are not roaring through the ranks while the companies themselves go public. However, this cycle is likely wired differently, and as a result, your attention might be better focused elsewhere for market signals. In 2025, many people already know about crypto. The classic retail wave, as we're used to in crypto cycles, has not really been part of the bull trend, at least so far. Instead, a huge chunk of the demand is flowing from ETFs and corporate treasuries, not through first-time exchange app users. Additionally, a lot of would-be buyers can already access crypto via the apps they use for stocks. Fintech firms like Robinhood already offer crypto alongside equities, and Robinhood is even expanding to launch its own chain. With access built into mainstream brokerages, the idea that people will download a new exchange app to FOMO in probably doesn't hold as much water this time around. So, given that backdrop, what should we read into these current listings? Well, a blazing debut, whether for an exchange or any other crypto business, tells you there's still plenty of pent-up demand, but that's only one piece of the puzzle. In 2025, the better tells come from the demand flows that got us here in the first place. ETF activity and the state of the currently booming digital asset treasury sector. Coinbase's direct listing taught us that a headline-grabbing open can indeed coincide with a major cycle top. While IPO fever can ramp up from here, and it's certainly worth keeping an eye on just in case things get really crazy, it's not the only thing you should rely on as a definitive top signal. But amidst all of this IPO noise, you may have overlooked a quirky feature of the crypto sector. That is, despite both retail and institution-focused exchanges going public, the dominant market leader, Binance, remains private. Throughout 2024, Binance CEO Richard Teng's message was simple. No need for an IPO because the business is profitable and well-funded. That was his line to CoinDesk in August last year. In June 2025, though, Teng nudged the door open a crack. After saying he was, quote, too old to never say never, he told the street that any listing would be a high-level decision. So, no concrete plan, but not exactly a hard no either. However, public markets hate waiting, and it appears that some investors have reached for a stand-in as a sort of proxy Binance stock, BNB. While crypto stocks were roaring in recent weeks, BNB itself set a new all-time high of $900. Now, Binance clearly describes BNB as the native utility token of BNB chain, completely separate to the Binance business entity and not anything like Binance equity. In practice, though, it still touches the exchange in a significant way. BNB holders are granted things like Binance Launchpad access and trading fee discounts. As a result, BNB's price is influenced by the business, even if it isn't stock. Crucially, with respect to IPOs, BNB's token burn mechanism is no longer funded by Binance operational profit as it was in the past. BNB burns are now algorithmic and gas fee based. Now that's important because potential Binance stockholders, in a world where Binance is trading publicly, would not like company profits going to BNB holders. And that so-called equity leakage question is a big one that has been addressed by exchanges that are looking to go public. For example, OKX used to run recurring revenue-funded buybacks and burns of its exchange token OKB. But this summer, OKX made OKB the gas token of its associated chain, XLayer, hard-capped OKB's supply, and ended manual burns. That weakens any direct profit-to-token pipeline ahead of a public stock listing. Value still reaches OKB via fee discounts and token-gated products, but that's more loyalty and utility than a standing revenue diversion. But back to Binance. Why does Binance not going public matter for the broader crypto stock market? Well, because if the number one exchange stays private, stock investors looking for crypto exchange exposure only have one option: buy listed competitors like Coinbase or Bullish while the market is hot. Now, in a perfectly efficient market, rational investors buy and sell until an appropriate price is reached for these exchanges, depending on current market share and conditions. But that's not reality. In reality, when the number one exchange stays private, the bid appetite for the whole sector floods into other crypto stocks or ecosystem tokens instead. And what would change the equation? Well, a real IPO process from Binance would give traditional funds a clean ticker to express their view on crypto's leading exchange without touching tokens. Unlikely anytime soon, but until then, BNB remains the closest thing the market has to Binance equity. A private Binance plus a record-high BNB signifies that gap. Investors want a way in, and they'll take the instrument that's available. So then, where do things go from here on the IPO front? Well, the pipeline is filling up. Just behind Gemini, Kraken is working towards a listing as soon as early 2026, per Bloomberg, and is simultaneously exploring up to $1 billion in debt to bulk up ahead of going public. Separate Reuters reporting says Kraken is seeking $500 million at a $15 billion valuation in the private market, more runway while the window's open. None of this is a guarantee, but Kraken is another very likely IPO candidate among major exchanges. OKX is another name to watch. After relaunching US operations in April this year, executives told media outlets that they'd, quote, absolutely consider an IPO and would likely choose a US venue. If we match this up with that overhaul in tokenomics for OKB to address potential equity leakage, it does appear as though things are in motion for an IPO. Meanwhile, there are other companies closely tied to crypto exchanges that have now caught IPO fever too. BitGo, a leading crypto custodian with $100 billion in assets under custody, confidentially filed back in July. In the same month, prolific crypto asset manager Grayscale also filed to go public. And these are just the IPO happenings that journalists have managed to uncover so far. Ed Engel, senior analyst at Compass Point, told Yahoo Finance that many crypto companies are confidentially filing for public listings, and he expects to see more announcements in the coming months. Now, with more IPOs on the horizon, it's worthwhile doing some froth checks as things progress from here. The first thing to look out for are those day one pops in price. Crypto IPOs have seen some major first-day surges, well above the standard 15 to 20% that bankers often target. If these numbers begin dropping, however, we have muted demand. Pretty simple. In addition to that, it's worthwhile monitoring the quality of the listings, especially as things are ramping up. Gemini hopes the market will focus on future potential, and perhaps there's enough demand such that bulls will do just that, but only to a point. But, as we've discussed, IPO dynamics are just one piece of the puzzle. Matching this up with the actions of digital asset treasury firms and ETF flows gives us a much clearer picture of how robust the market is. Whichever way you look at it, though, the market is hot. So, let's enjoy it while it lasts. And that's all the time we have for today's video. If you enjoyed it, though, make sure to give it a like and hit that subscribe button. And if you're curious about those digital asset treasury firms we mentioned, you can watch our video on the biggest ETH treasury companies right over here. That's all from me for today, though. As always, thank you for watching, and I'll see you next time. This is Guy, over and out.